Recording here. Alrighty, we're good. So today's AMA is actually with um, ReFi, which is, and Huff, I guess you can correct me if I'm wrong. Well, I mean, I guess we could just kind of start here because me personally, I've known of ReFi like ever since you guys first launched, and I know that you guys were quite big as one of the like kind of like the pioneers in your guys' particular space. And I really personally, I haven't really stayed up to date with what you guys have been doing. Um, over I guess throughout the bear market. So I guess that's what I would like to kind of learn about today, and I'm sure other people would as well. And then I think that we have a couple other questions. But boys, thanks for coming here on the Soapbox. We're going to be recording this, so for people that didn't happen to make it, because it's kind of like a different time that we or than we usually record, but it'll all be uploaded to YouTube, and so people that miss it live will be able to catch the replay. But again, thank you guys for coming on stage and kind of letting us know what you guys got going on. But yeah, I guess we could kind of start there, and if you could kind of catch up to speed with how you guys have been doing it, or maybe give a breakdown of exactly what the project is. I know personally what you guys do, but yeah, we'll go ahead and start with that.
Yeah, we can start with a recap, and thank you for being a fan and a follower.
Mhm.
So in December of last year, me and a couple of developers got together, and we realized there was a huge opportunity for farming as a service, i.e. there was all this yield to be generated across different DeFi protocols on different chains, but it was a pain in the ass to do it.
Right.
And so our initial iteration was the ReFi token, which is still live, and has a track record now of almost just over 9 months of live track record since December 2021. The premise was really simple. We wanted to make it as democratic and as easy to access as possible. And so investors could come to Uniswap, swap their Ethereum for the ReFi token, a portion of which comes to me and my investment team. So it's me, Mark, and Chun on the investment side of things. And then we would farm that ETH on multiple chains. And whenever we generate ETH yield, that would then be sent to the smart contracts for distributions, and investors could, depending on how many tokens they owned, how many ReFi tokens, they could claim their distributions in Ethereum. And
Right.
we've had huge success with that. So the first couple of weeks, we reached 120 million market cap quite quickly. Our total AUM is across all our portfolios is about $4.5 million. And we run a fully unconstrained mandate, which means I can do stablecoin farming. I can provide liquidity on Uniswap V3. I can do some delta hedge strategies if I want to. I participate in the options and derivatives markets. We've been using perpetuals. We participate in early stage seed rounds as well as strategic rounds, and a whole bunch of things really. So the way to think of us today is like an on-chain investment fund, if you will, somewhere to passively park your either ETH or USDC, and we can talk about the different product offerings we have, and earn yield on them. And so just as a recap for people that didn't know us, that's us. We're a farming as a service provider, and we're very proud of some of the things that we've paved the way in, especially with regards to transparency, and really like showcasing what's going on in the portfolio and talking and educating our following on what we're doing. And then also just in terms of security as well. So we use Fireblocks as a digital asset custody platform, which is pretty much the safest way to interact with any smart contracts, especially when you have multiple teams involved.
Sure.
So that was December. We launched a token. It was an incredible success. It's still running. I hold a lot of the ReFi token as well as a lot of the community, and it's something that we are consistently building. Two other developments that's happened in the timeline between now and then. In March, a third party came to us and said, look, we love ReFi, we love what you're doing. Could you manage a portion of our treasury for us? And they physically gave us $1.5 million into our Fireblocks account for us to manage for them. I'm proud to say that Ethereum back in March was 3,200. And today obviously trades sub around 1,600, so around half the value. And yet we've still managed to realize a performance of just shy of 5% for them in that time period. So that's a third-party mandate of 1.5 million. And then just in August, we launched something called ReFi Pro. and ReFi Pro is a USDC vault. So you deposit USDC. At the end of the month, you can claim, and you should hopefully, and investors did, get back more USDC than they put in at the start of the month. So just to recap, ReFi token, third-party mandates, and then ReFi Pro most recently.
Awesome. And when you guys first launched, were what, like, was the token like kind of a reflection token, or were people actually getting dividends then?
It was split. So when we initially launched, the taxation structure, if I recall correctly, was 12% all in. I think 7% of that was reflections, and then 5% was coming to Treasury at the time. And those numbers changed over time, but it was broadly half and half of a reflection token, and then half coming in to Treasury as a tax. It has changed over time, but stayed constant as a 12% kind of total taxation on the way in. So we at one point had more going to the Treasury. We had a ramp up period where all 12% was going to the Treasury, and there was no reflections. And part of the reason we did that was because we did a snapshot vote. It's what the community wanted.
Right.
And we wanted to show proof of concept that we are sustainable, even if there are no volume-based mechanics to the token.
Right. And how, like, since well, at least my understanding, right, is like, so you're doing farming as a service to generate yield for people, which in and of itself is it could be insanely complicated, right? There's a ton of different metrics that you need to kind of have your finger on the pulse of. Um, so yeah, and it's really interesting now that you've kind of released these vaults, but I'm curious how you guys chose to handle everything that's going on or that has gone on during the last, I don't know, let's just call it 3 to 6 months, coming into this bear market, and the overall kind of, I don't necessarily want to say like negative stigma, but there's definitely something where people don't really trust DeFi as much as as definitely as much as they used to. I think that a lot of people now see DeFi more as like Ponzinomics built to everything. And like, how have you guys kind of overcome that hurdle?
Yeah, I think it's been a challenging time for DeFi, and it shows in the statistics, right? So TVL has dropped. The number of hacks and protocols that were hacked, and the total size of those hacks has increased exponentially. And also, a lot of the tokenomics just did not work, whether it was Anchor and its kind of dwindling yield reserve, or whether it was Ohm and its unsustainable inflationary um, dynamics, and then all the Ohm forks thereof.
Right.
I think if I take a journey back towards the start of the year, and then what's happened since, we were pretty bearish as a macro outlook at the start of the year. And so we never really went all in to anything. I mean, our strategy is always to be diversified in any case,
Hmm.
but we were really skeptical of a lot of the own forks. So the only one we really participated in was Midas DAO, and even that we were very kind of in and out of it when we needed to be. But it's kind of real skepticism of a lot of the DeFi landscape back in January, February. We then turned bearish in March, which was the right call. So if people listening remember, we went from the 2 million portfolio we have today in ReFi Core. We had like 3.3 million back in March. And I'll be really candid, like, we did some things really well. We were long Ethereum puts, and we shorted Luna, and we did very, very well out of those trades. So we got to an all-time high in the portfolio, and we were paying out bi-weekly distributions back to our holders. If I think about the good things that have happened back then, also we avoided any of the hacks that happened with the likes of Beanstalk and Rari and Fuse and things, and that's just because we took a very conservative approach to what we were doing. I think the mistake, if you will, reflecting on April till now and across DeFi and what's been difficult, is we have been trying to buy selectively, and obviously the market's just gone down and down and down and down. And I think from our perspective, even though we have been actively searching for protocols that have a real world use case, like Maple Finance or Clearpool or any of these kind of lenders that are lending to real businesses.
Mm-hmm.
Um, I think we got caught up a little bit in thinking that the market had bottomed when it hadn't, and we didn't expect the degree of DeFi like negativity
Right.
to persist as long as it has. So I thought, like for example, there's the meme about the 3 hours capital gap,
Right.
and that weekend when ETH went from like 1,700 to sub 1,000 very quickly. I would have expected that to have got filled quicker, but it didn't, and so we've seen like a very choppy June, July, August, and now September, just to get back to those kind of levels.
Mm-hmm. So right now, how many like lead farmers that do you guys employ? Um, and how does like I'm just kind of curious, like how does that communication work throughout the team to make sure that everybody's on the same page?
Yeah, so there's three of us. So it's me, Mark, and Jun. Mark, by way of background, has 15 years of TradFi experience, trading corporate credit for a big, well-known US bank. And Jun is our research analyst, and he's at Wharton Business School. The first thing to talk about there is infrastructure. So Fireblocks is very transparent, and whenever one of us wants to initiate a transaction, it immediately flashes up on our individual phones, and we all have to sign off on it. So in terms of the infrastructure and how we operate, every trade, especially for ReFi Pro, goes through Fireblocks. So that's the first thing from an operational perspective. From a more kind of strategy and a theoretical perspective, how do we split up the mandates?
Mm-hmm.
I let Jun and Mark handle a lot of the low risk stablecoin farming. So they're on top of all the developments that are taking place, whether it's on Optimism or Avalanche or Arbitrum, etc. And they'll be doing a lot of the yield farming and just making sure our stables allocation is always 30 to 40% of the overall portfolio. And then myself and Mark really share responsibility for taking on some of the more directional views that we have on the portfolio. To that extent, we meet once a week on Mondays. So actually tonight we're going to meet in about 2 hours. We chat for about 2 to 2.5 hours. It's quite a long deep dive. We talk about the DeFi landscape. We talk about protocols we've been speaking to. We talk about our macro views. We talk about the existing positions across all the portfolios. And then we decide whether we're going to take any actions or not. And then we have a daily chat, which is very active as well. So
Yeah.
sometimes on Twitter, I'll post screenshots from the real time alpha channel that we have on Telegram. But basically, that is just a digestion of the conversations we're already having within our own internal farming chat that
Right.
day.
Now, do you guys have like a specific portion of the portfolio that is dedicated strictly to like higher risk stuff?
We do, yeah. So if you think about the portfolio today, it's currently about 45% in stables, about 25-30% in medium risk stuff, which is, I would consider like GLP, a medium risk strategy, which we can delta hedge. And then about 10 to 15% at any given time in notional terms for perpetual positions, which are either long or short using DYDX.
Right. Now, like as far as I guess when we're talking about like the difference between just buying regular refi tokens or choosing to invest into um, like the refi pro side of things, does it necessarily like depend on the investor's risk profile or like I guess where would you recommend somebody looking that hasn't jumped into refi or is just hearing for you guys or from you guys for the first time?
Yeah, so we've got Nev here. Nev is our community lead who fields a lot of the questions that people come by
Mhm.
in Telegram and ask. He also co-authored an article about whether the ReFi token or ReFi Pro was the most relevant investment for somebody. So perhaps Nev, you want to chime on that, and I can join on top.
Yeah, sure. Thanks, Huff. So I've just sent a link in the AMA chat. So it brings you to our ReFi Gitbook page, and essentially it kind of separates investors, potential investors that are interested in investing into ReFi into two main buckets. So, for instance, number one, if let's say you are looking to buy ReFi tokens, then you would generally be someone who would like to have ownership of the ReFi protocol and ecosystem. You would typically have higher risk tolerance, and you are fine with having exposure to the price appreciation of the ReFi token. So as you invest into the token, that could be up to 10, 20, 30% increase in price or decrease in price. So the investor must be fine with this. And also, if you purchase ReFi tokens, you would also receive distributions that are paid out by the ReFi protocol. And these distributions are based on the performance of our core portfolio and AUM. And you would also receive reflections from all buy and sell transactions of the ReFi token. So all these factors may appeal to a new investor if they would like to purchase ReFi tokens. And just to add a little bit more, the second bucket is if a new investor comes in, they are typically an institutional investor that could potentially invest up to hundreds and thousands with the ReFi team, and they would also have lower risk tolerance compared to your usual individual investor. Then we would usually recommend them to look into ReFi Pro, which is the service that is more suited for institutional investors. So definitely Huff would be able to share more on this, because the main rationale for us creating ReFi Pro was through conversations that we had with various institutional investors, funds, etc., whom did not want exposure, to the huge volatility of the ReFi token.
Right.
But they also wanted us, based on our track record, based on Huff's track record since the launch of ReFi, they also wanted to park their capital with us. So so in a nutshell, these are the two buckets, and I believe that.
Of the treasury value, and it has consistently done that, and there's a reason for that multiple to exist. Whereas ReFi Pro, if you deposit $1,000 and I make 10%, it should only ever trade at 1,100, which it does because it's a vault. And so they're slightly different risk profiles. I think if you are a DAO treasury or somebody like that, and you just need to put some money aside in a low risk mandate, you put it in ReFi Pro. If you're your average retail investor who wants to earn yield across the DeFi space and has a slightly higher risk tolerance, then ReFi token is probably the most attractive there.
Cool. Sorry, I cut out for a second, guys. So my apologies there, but we are back. As long as everybody can hear me.
Yeah, we're still good.
Okay.
Everything's fine.
Cool. Cool. Thank you guys for that. I think my next question is like kind of going in more so to the difference between just the token and ReFi Pro, and like, is that essentially like two different protocols, or do they impact each other? Are there benefits of either or how does that work in tandem with each other?
Yeah, so they are connected, and they're connected for the benefit of ReFi token holders. So the ReFi token, the tokenomics of it, just so you're aware, is such that there's a 6% taxation in and a 6% taxation out. Those full reflections go to ReFi holders. So if somebody buys a ReFi token or sells a ReFi token, that volume, the full 6% tax, goes to ReFi token holders. ReFi Pro is a separate product offering which charges hedge fund-like fees, so 2% management fee and a 20% performance fee. And those fees are shared between the ReFi treasury and ReFi token holders. So I'll give you an idea. Last epoch, in the August epoch, the ReFi Pro offering took in deposits of 770,000 USDC. We generated fees of 15K, and we passed back the full fees, the 15K, back to ReFi token holders.
Oh wow. That's
the
awesome.
The rationale being, like, we don't want people to ever feel like we're forgetting them, right? Like, one of the concerns in the community was, was the ReFi token launch like your kind of first foray into farming as a service just before you launched ReFi Pro, which is the more scalable thing?
Mhm.
And it's absolutely not the case. So when we designed ReFi Pro, we designed it in a way that ReFi token holders will absolutely benefit from it.
Yeah, and I think that is I mean, obviously that's definitely important too, for sure. So I mean, as far as ReFi and ReFi Pro goes, like what are some things that you guys are looking to accomplish, or where do you guys see yourselves in the next, let's just say, 1 to 2 years? And I know that's a crazy long time stretch in the world of DeFi and crypto in general, but yeah, I'm curious to see what you guys say.
No, it's a super important question. So I had a call this morning with a family office based out in New York, and he made a very valid point. He said, why is there not like an on-chain version of Bridgewater or Brevin Howard or any of these big funds, right? And my answer to him was really simple, which is that to launch on-chain, you need track record. But a lot of the people in TradFi that have a track record don't want to come and launch an on-chain fund for either regulatory reasons or reputational reasons, right? So you have a whole bunch of people who have experience managing capital that don't want to do it on-chain for their own reasons. There are very few people on-chain that have a track record, which we've had since December, also a track record with third-party funds, which we've had since March, also a growing track record with ReFi Pro, as well as a team that has significant TradFi experience, so myself, Mark and Jun, who can really pull off what we're looking to pull off, which is to become the leading on-chain investment solution, active investment solution. And that's what we want to become. Whenever somebody thinks, I've got some spare USDC or I've got some spare ETH, I want them to think ReFi in terms of the go-to place to earn yield in an actively managed way. And there's plenty of places to go for passive management where you can put it on Aave or Compound or some other smart contract. But in terms of active management and having that transparency of somebody reporting back saying this is what we're up to, this is the treasury value, etc., that's where we want to be number one. What does that look like? Numbers wise, I see no reason why ReFi Pro can't be a $100 million AUM project. And I can't see any reason why ReFi the token can't go back to 100 million market cap as well.
Right. And where was it? Where was it at the peak? I'm sorry, like market cap wise for the token.
116.
Okay. Yeah.
Oh, geez. So I have a question if I can just hop in for a sec. Obviously, USDC, ETH, pretty hot commodities. I myself pretty much transfer everything over to USDC whenever I'm looking for something really stable. So I'm really glad you guys are able to work so closely with that particular stable. So is there any, but I do know that there's a lot of people, including people that I know, who do a lot in Binance. Is there any plans ever to try to maybe include BUSD or BNB sort of into the staking options? Or as you would call active, into ReFi?
So into ReFi or ReFi Pro?
I am down to hear either of those.
Okay, so the ReFi token currently is available on both the Ethereum mainnet and available on the Binance Smart Chain, right? So you can swap ETH for ReFi on Ethereum mainnet, or you can swap BNB for ReFi on the Binance Smart Chain. That's just been a function of liquidity pools, and one is on Uniswap, one is on PancakeSwap. You have to see the liquidity pool, and the predominant token for Ethereum is obviously ETH. The predominant token for Binance Smart Chain is BNB. I don't think we'll launch on another chain for the ReFi token just because it's expensive to see the liquidity pool.
Right.
Coming to ReFi Pro, so it's a USDC denominated vault. The reason why we did that is because the contract is on Ethereum, And like you said, there is a growing consensus, especially aligned with our own internal view, that USDC remains the most transparent stablecoin issuer. And so that's why we decided to have a USDC vault. To launch additional vaults in the future, there's no reason why we can't. I know that different people prefer different stablecoins for different reasons, whether it's USD or whether it's DAI or whether it's USDT. Again, that's part of the roadmap for ReFi Pro, which is to offer investment solutions that are open to all, right? And one thing that we'd like to do over time, once we've shown that ReFi Pro works, is you can have ReFi Pro low risk, ReFi Pro medium risk, and ReFi Pro higher risk, and then we can manage those portfolios accordingly as well.
Yeah, no, and then you kind of hit the nail there when you said, these vaults that can open for other stables. The main reason why I ask is because I obviously carry a lot of USDC. However, I know on these other chains, I try to kind of flex into other stables just to kind of mitigate. Obviously USDC is super stable. It's going to probably be here for a while. But just to have other stables, my other tops are definitely BUSD, definitely DAI. You said USDT. I don't think I do much with that, but so it is always nice to see other vaults and other stables being incorporated into projects.
And it's good feedback, right? Like, to be honest, it's not something I've thought about recently, just because I'm blinded and blinkered by trying to build out the USDC vault on Ethereum so much that I forget that there's all these stables on different chains and different. You do need various stablecoins just because they have different mechanics and different use cases.
Yeah.
And I think it's also pretty cool that, so just from my experience, I know that there was at least one or two farming as a service protocols that came out after you guys that try to go cross chain, and I don't think that they did a really good job at it. And I think that that's kind of an important aspect of it too, is like knowing when to do it, when to use that liquidity to go across chain. And from the sounds of it, it sounds like you guys did it right,
Yeah, I'd say we just about have broken even on the move to Binance Smart Chain. So we raised $1 million of debt capital to seed that. And then we paid those people back as well with interest. And those were some of our kind of whale investors back then.
Right.
And we broke even, as in like back when treasury tax was 12% and people were buying on this Binance Smart Chain. We did see a significant amount of that come back to us in the treasury. But it certainly is a case that if we were to launch on another chain, there's a reason why even the biggest projects have their predominant liquidity pool on Ethereum, and Uniswap on Ethereum in particular.
Yeah, definitely. So before we go ahead and jump into the chat to see if there's any questions there, if somebody in the audience was keen on buying ReFi tokens or investing in a ReFi Pro, how would they go about doing so right now?
Yeah, so ReFi Pro has a separate landing page, although I do believe our current page also links to it. So pro.reimagined.fi. The September epoch has just started, so you would have to wait until the next month now. But essentially, it's as simple as, and it's been designed with this in mind, right? It's the simplest landing page on ReFi Pro. You deposit USDC, you come back tomorrow, you'll see it's plus 0.1%, plus 0.2, 0.3, whatever it might be that day. And then at the end of the epoch, so at the end of September, for the current people that have invested, they can withdraw or they can choose to keep their capital invested for that month.
Sure.
And so it's as simple as deposit USDC, withdraw USDC. And all the information about fees and things like that is just in a drop down underneath the main UI.
Cool. Awesome. So I'm going to scroll through these questions. I know that some people were just kind of chatting. But let me see if I can find some questions. Ludo, if you see anything, let me know.
Yeah, I got one here. So Ezekiel Bread said, do you have a plan to create this is Aces. Aces, do we have a plan to create a visual roadmap for ReFi Pro?
I think that's a great idea. Somebody should do that within the team.
Good. Yeah, like you said, all about good feedback. Yeah, visual roadmaps. I know personally that anytime that I see a team that has one of those, not only does it help me and to kind of get oriented within the protocol itself, but it is always nice to be able to see that. And it shows kind of an initiative when people are able, visuals like that are available. Ezekiel says, if ETH or BNB price drop, how could that affect the protocol?
So a couple of things. Number one, you need to be familiar with how AMMs work. So the ReFi ETH pool, let's take for example, Uniswap has this X times Y equals K constant kind of pricing model. If Ethereum price drops, it has a subsequent impact on the Ethereum price, on the ReFi price, and similarly vice versa as well. So as long as you're familiar with how a AMM like Uniswap works, you'll know the dynamics at play largely there. Generally speaking, ETH going up in value is good for us. BNB going up in value is good for us, not just from how does Uniswap pricing work, but also from a sentiment perspective as well, where the market is more constructive. It's better for ReFi token holders. There's more confidence in whatever's happening in the market. And then with regards to our portfolio, sometimes we're net long, sometimes we're net short. So it's hard to say. That's a bit more of a fluid question.
Right. I do have a kind of a personal question. Well, not personal in that regard, but for me,
Who are you dating?
Yeah.
And how long for?
Right.
Yeah.
So everything, I mean, at least from my observance of DeFi, let's just say over the last year, things are very cyclical, and we'll get into like phases where certain types of protocols or DeFi projects are kind of hyped up, and then they kind of die off, and then the next thing comes up. And right now, what I'm seeing, and maybe you've seen this as well, maybe not yet, but I've seen a lot of, and I don't know if this is necessarily DeFi, but maybe, but a lot of these protocols are kind of coming around where they're using bots to trade, and then using those profits and sending those profits back to people that are either essentially like staking stables or other blue chips, or they have tokens associated with this as well. And curious what your guys' thoughts on that, and if that is something that maybe is down the road for you guys.
Yeah, I don't know if you got the rest of that question, Huff. Bots in the protocol, what do you think about it? Do you think that's something that could be implemented?
Yeah, I think we're in view trades before they appear on chain. If you are good enough to be able to code some things from the mempool and use that to inform your trading strategy, then I think you should. We're not there yet in our journey, just because we haven't prioritized that accordingly. But I think it'll be a bigger part of the landscape, and like anything, you've got to be careful for scams, and you've got to be careful for things that are not well constructed. You've got to be careful with regards to the founding teams, but I think there is a huge opportunity, and it's still quite nascent in terms of the people doing it and who have pulled it off.
Yeah. Okay. That makes perfect sense. I do know that that's kind of a big, like you said, it's growing demand. I know there's several projects that are coming out with it. I could just see, with everything you guys have going on, I could really see it being something that you guys not only could do, but you could do well. So I like you said, you guys got so much going on at the moment. We have another question here from Keith. Keith Obrey is an OG of our community here. Asked a great question here. Would you consider the ReFi token similar to an index fund with added benefits of profit sharing?
Let's think. So you are an index fund if the underlying was investments in DeFi protocols, like actual borrowing and lending, perhaps with a distribution angle. Yes, I think it's a loose analogy, because you don't retain ownership of the assets, right? So when you buy an index fund like an ETF, what you're physically buying is one share in the in the pool in that exchange traded fund, and if you wanted to redeem your one share of your ETF or your index fund, then the index provider would go to the market and physically sell like for like amounts of assets. Whereas if somebody comes to Uniswap to sell the ReFi token, I don't necessarily need to rebalance my portfolio because my portfolio doesn't go up or down based on buys and sells of the token.
Yeah. Very interesting. So I think there's
it's like the treasury is immune from everybody selling, right? So if everybody sold an ETF tomorrow or an index fund, then the indices would crash because everybody's selling, right? Whereas everybody could sell the ReFi token, the token could go to zero, but I'm still sat with the treasury of $2 million, assuming it was just parked in stablecoins.
Right.
Oh, yeah, I guess that's an incredible distinction to make in that case.
Right. So another question from Emo. What would you estimate are the current operating expenses as a percentage of the treasury, and how will those expenses change as the treasury grows?
Yeah, so because we operate in the digital landscape, right, we don't have the same overheads as many physical businesses. So we don't have an office, for example. We don't have like in real life costs to pay, like actual vendors or electricity suppliers or whatever it might be. And we are quite lean on costs. So we have a fixed cost schedule. Everything is visible on chain. It goes out weekly. It covers us from a dev point of view, from a marketing perspective. It covers my salary. It covers any conferences that we've attended. It covers any graphic design work that we're having done. It involves any agency work that we need to pay for, whatever it might be. And it's set at a cap of $20,000 a week. So it's either underneath that or at the cap. We don't like to pay out more than that. And again, that's all verifiable on chain. And that has actually been on a downward trajectory. So one of the things as a management team that we've decided to do over time is to constantly reduce our expenses, whether it's reducing salaries or reducing our outflows. And it's something we're super conscious of because obviously you need as much runway as possible in this market condition, because I think our macro view is that we're in a prolonged bear cycle, at least until 2023.
Yeah. Well, cool. I think that was going to be, I don't see any other questions, but that was going to be my last question, was kind of where do you see the overall landscape of crypto and DeFi as a whole right now? And like, what are your thoughts on when we start to see kind of reversal or just a general consensus of everything that's going on now?
Yeah, so in my mind, we've gone through a cleansing process. So we've got rid of a lot of the bad actors in this space, like, the people that were propagating meme coins and all the rest of it in March till now have largely disappeared, right? And thank God for them, because a lot of these people are just scam artists or they're opportunists. We've also got rid of a lot of leverage in the system, whether it was 3 Arrows Capital, Genesis, BlockFi, Celsius, etc. So a lot of the speculative leverage has gone as well as a lot of the ego, right? So people like Do Kwon, etc. And so what we're left with is like, it feels painful, but it's a fertile ground to build. And I spent my whole time, like my whole day, speaking to either investors or DeFi protocols. And the guys that are building, and the guys and girls that are building some of these DeFi protocols, firstly, you've got a huge amount of talent coming in from Web 2. So like people coming from the Googles and the Amazons of Metas of the world. And you've got people really, like in a bear market, really focusing on product market fit. And one good thing about this bear market is it does make people go back to the drawing board and think, look, what is the actual use case of DeFi? And where are we going with this? So my general view is obviously we're tied to the macro environment. I don't think the macro environment, based on whatever's going on in Chinese housing, European gas, or US and the Fed, is going to get better anytime in the short term. But what is encouraging is the people that are building in the DeFi space are building with product market fit. And I think if you can get away from this label of DeFi and just call it on-chain finance, especially some of the stuff that's happening with credit lending platforms like Maple, Clearpool, TrueFi, I think there's definitely a case where there is more product market fit being established.
Yeah, definitely. That's a great answer. Looks like we have just a couple more questions. We'll go ahead and wrap it up. Is there any way to stake the ReFi token, or are you only getting reflections on the actual ReFi token?
So the ReFi token, there is no staking mechanism currently in place, although we're constantly, I mean, it's interesting that you bring it up because Nev can attest it was something that we were talking about yesterday on our Telegram channel, just between the founding team, about what other kind of low hanging fruit things that we can do to enhance the token accrual and value accrual for holders. And that was something that was thrown in the mix.
Cool. Yeah. Another question, which I already know you guys do. Do you plan on releasing monthly updates to the community regarding expenses, roadmaps, changes, or how the project's going? I would also imagine that how the treasury is holding up or doing as well.
So we're pretty transparent on the treasury, right? So we do a daily update on Twitter with the treasury value as well as a bit of market commentary. We also have used and are using multi-farm, so anybody can go on our website and look at the live dashboard of how the treasury is allocated at any given time, which updates in real time. And then we also have a weekly DeFi review on Thursday evenings, where we talk about the portfolio and the team as well. So anybody that's interested, I would definitely either go back and listen to our Thursday spaces, where we deep dive a lot of this stuff, or join us for one of our future spaces. We talk about the portfolio, we talk about our operating costs, we talk about where the project is going, we talk about our macro view, all of these kind of things. And then periodically, and it's not so much monthly, but periodically we do write articles on how to value ReFi, and there's a lot of content there about our expenses as well.
Awesome. And then the final question from Zamster: what are your expectations? What are your expectations for profits for the protocol as a whole? He says kind of the converse to the expensive questions. Think of this as like your net profits.
Yeah, so I think we have a short-term goal, which is to be cash flow positive, right? So in the short term, for every, let's say, every $1 million that comes into ReFi Pro, 2% of that is taken as a management fee, which is shared between ReFi token holders and the ReFi treasury, i.e. us and the team. And that's where the operating expenses go into that treasury pool. So for every $1 million that comes into the ReFi treasury, that's $20,000, right? Mm-hmm. And that covers a large chunk of our costs. So I think our first instance, especially because none of the reflection tax is coming into treasury, is to become cash flow positive from an operating expenses perspective. I think from there, you can talk about how profitable can we be as a business. And there, maybe like we're in a volume business. So today we just crossed a landmark of $1 million for this September. About 1.1 million is invested into ReFi Pro. The kind of investors that we're speaking to have hundreds of millions in their treasury. If they were to allocate 5 to 10% of their treasury to us, and we were to do that with a number of clients, there's no reason why we can't accrue hundreds of thousands in fees just from ReFi Pro.
Right.
And then you've got the ReFi project itself, which when markets start trending again, we will start to see those returns that we had between January and March.
Cool. Yeah, definitely understand.
Yeah. So first of all, I just want to thank you guys again for coming on. Awesome guys with the questions. Really glad that so many of you guys were here to join. I hope you guys saw my message to our listeners. I hope y'all saw my message in our Discord chat. I want every one of you to go ahead and send me your address. I'm going to send you guys some USDC for showing up. Take that USDC, definitely invest it with ReFi here. I know I'm going to. I have some set aside USDC right now that I'm going to try to make sure to put in. Yeah, send me your wallet addresses. Make sure you have the Binance Smart Chain. I'm going to go ahead and send you probably USDC or BUSD there. Convert on PancakeSwap if you need. Hoff, do you have any closing remarks for us? Like I said, really appreciate you coming on.
Just on ReFi Pro, because it was designed as a kind of institutional gateway to the ReFi token project, or the ReFi project, our minimum is 25,000 USDC to deposit in there. For everybody else, I think the ReFi token is the most accessible way to our community and to the upside in what we're doing.
So take that USDC and buy the ReFi token, unless you got 25K lying around. Might be some big swingers out there. As I said, thank you so much for coming on. Make sure you guys check out this recording on YouTube, from Murdoch DeFi's YouTube channel.
Yep.
And Huff, this is great, man. I hope that we can have you on pretty soon again. Okay, bud?
Likewise, man. I'm a fan of the channel, and I look forward to seeing this uploaded there.
Awesome.
All right, guys. Well, take care, and we will see you guys all next time. Thank you guys so much.
Amazing. Thank you so much.